The first example is the pound against the dollar. This is the 17th of November. And what's interesting about this is obviously this started in the middle of the range. Okay, so I think that's the important thing to note. It did start mid-range. Okay, so breakouts can occur mid-range. And that's why it's so important to know your key levels. Okay, so important. And that's also why we have got our blue lines in place. Okay, so we put those blue lines because sometimes the market might begin the process of a breakout very early on. Now, let's take a little look at the key signal we got here. Now, the first, I'm going to bring your attention to the bottom. Let's look at the volume dynamic. So we can see not a great deal going on. Market began the process of rotating a little bit lower. Again, I will show you this in an example, in a live trading example. But what I want you to focus on more now is the clue. So we can see very clearly the clue was the market tried to go backbid, and straight away someone sold here very, very aggressively. Okay, so there was a really big seller. Okay, note once that buyer had identified the seller, notice how it begins the process of thinning out. Okay, so in other words, we started to see the seller become far more intentional and aggressive. So we got the clue, there's our clue, and the market suddenly responded in a very, very, very aggressive manner. Okay, obviously note some of the imbalances with some of the zeros, some more imbalances, and ultimately a very aggressive wash down. Okay, now some of the key sort of factors that we pay attention to, obviously, we want to see that pick up in volume and delta. In terms of execution, all we're simply looking for is we're looking for that clue. Once that clue comes in, we're looking for an opportunity to enter. Now, the best part about a clue is the stop. Okay, because if we have a clue, where does the stop go? Well, it's very simple. We should not be clearing that clue. So it's very simple. And this is why breakout trading can be so lucrative, because you've got maximum risk reward. Okay, this is probably hands down one of the best risk reward trade strategies you can learn, but only if you're willing to learn the clues. Okay, so we get the clue, we try and execute wherever we best can, probably within that absorption. 320 contracts traded. Once we get the clue, we short. And I think the breakout came somewhere in and around that price. We will obviously see that a little bit later on. Okay, so that's our first example of a clue. Our next example is in the gold market. This time, obviously, we have a little bit more of the traditional type flag breakout, the one you're all familiar with. And again, I'm going to show you a live recording of this. But the real sort of hands down, what's going on here was we could really see that little 163 lot. So you can see if you compare it to what had gone on in the previous 3 rotations, okay, obviously these are 5-minute rotations, so you can see nothing was going on. No volume trading, okay, really, really light volumes. In terms of prices, we were averaging, 3-4 price ranges. In terms of the delta, relatively positive, cumulative wise, nothing going on per rotation. Suddenly, we do, well, not just 10 times the volume on the previous rotation, but double what we've been doing on average over the last couple of rotations. Okay, so there's your absorption, 163 lots. Note, one seller sold into him, so he got filled. So someone reloaded, buyer reloaded, absorbed. Once the market picked up on it, notice a little bit of an imbalance here. Okay, so 11 goes to 18, 0 goes to 39. Again, another little imbalance, 39 to 129, 15 to 71. So that was the beginning process of initiative being taken. Now again, this is our clue. Our execution will probably take place somewhere here where we can get liquidity away, and we want to be in ahead of the break, and this is where the break occurs. Okay, so we can see the break occurs just above that 92.5. Notice a whole bunch of stops on the break and continuation. Also notice the volume pickup as well as the delta and the delta on the day. Okay, so that's our second clue. And again, I know it sometimes seems easy, but it is that easy, guys. You just have to learn to observe the clues from the markets rather than trying to anticipate, rather than trying to second guess yourself. Okay, you're simply waiting for that clue. Bang, when that clue's in, you execute. Okay, now what we're going to do, we're going to have a look at one more example. This is now in the gold again on the 5th of December. Again, a 5-minute rotation. Now, this is the second strategy. So obviously, we've spoken about the 2 types of execution. One is on the clue ahead of the break, and we want to be in on the break. The second is then, once we've had a breakout, the first pullback. Okay, so we've identified a good breakout. We wait for that first pullback. And we can see, very simply, obviously market has a nice exhaustion low. We've spoken about those in previous units. Tries to take a breather, comes back and tests, obviously, a pocket positioning or a high area of liquidity that was previously provided, and holds that point as resistance, not just once, but twice and 3 times before continuing lower. Okay, so that would be our second entry point, which would be that first pullback. Now note what I would say. What is very different, and this is a rule of thumb, okay, with a breakout, what I want you to do is get rid of all the other understanding of you know, for instance, exhaustion low and highs, okay? Because like I've said to you, every one of these trade strategies has to have some form of context. Now, a breakout trade strategy, by definition, is all about price discovery. Now, when a market goes into price discovery, it's not a one-off feature. Okay, so it's not like we break, pull back, and then stop, and then come back down. Okay. Yes, when that happens, we have a failed support and resistance. But more often than not, a breakout, we have the break, we pull back, and we're more than likely, very high probability, going to always extend and continue the function of price discovery. Okay, and that's the key, guys. Right? If you know that, if you know breakouts, good breakouts will always form some form of price discovery. You can execute once, early, ahead of the break, make good money, take your profits on the exhaustion because you've learned that principle, sell the first pullback, okay, and hold on for the second extension. 2 trades, 1 strategy. Okay, now let's take a look at one of the examples. And the first example we're going to look at will be from the gold. This is on the 27th of November. And like I said, obviously, this is the breakout I was showing you on the board. Now, I'm just going to fast forward it to that point so you can see what it looks like. 163 lots. So all we're going to really focus on is this clue being provided. So again, like I said, note the variations. Nothing really going through the market. Really, really light in terms of volume. Not a great deal going on. We can see the market comes down. And all of a sudden, we start to see someone selling. But equally, someone reloading the bid. Okay, and this is what we call buying absorption. Right? And note where it's coming. It's so important. The buying absorption needs to come at the extreme point. In other words, ahead of the break. We don't want to see it down here on the candlestick chart. Okay, we don't want to see it at the base of the consolidation area or distribution area. We want to see it towards the high end, so just ahead of the breakout. And that's our real clue. Okay, so we can see real absorption going through. You can see the delta picking up. The moment the market stops selling to him, note what's happened. So notice once that pauses, there it pauses. Straight away what happens? Bid up. Straight away the markets realize that someone is sitting there reloading. And obviously all of a sudden the market responds in kind. So we get the bid up. Straight away we see a little bit of initiative coming in. And the market then suddenly decides to take the break and continue high. Now again, as you can see, a little bit of a double top on the dailies in the gold market. Again, notice the volume shift here, guys. This is really key. Look how the buyers are shifting their intentions. Okay, no dark blues in any one of the previous rotations. Suddenly a lot of dark blue, no selling. Okay, 1 lot sold, 10 lots sold, 28 lots sold, 0 lots sold, no selling coming in. Only aggressive buying. Again, notice the reload at the highest price of the day. Okay, really aggressive reload there at 92s. Straight away back on the bid. Buying the market at the best price available, 129. Straight away up to the next best price, 71. No selling coming in. And all of a sudden, we're going to see the market panic to the upside and take some stops. Okay, now note, in terms of execution, we obviously do want to get in when this absorption is taking place. If we're not in, again, yeah, you might be able to get a fill around that 1 lot. But remember, you are then at the mercy of a seller. And we can see there's really a real lack of selling coming in. So by waiting, you're simply adding to the risk of your trade. Again, note the 158 lots, quite an aggressive amount of buy-side order. Where? At the high of the day. Okay, and that's the shift in dynamics. That's the real clue that something has shifted and the breakout is about to occur. So I'm just going to fast forward this slightly. We can get to that breakout point. And let's just take us 1 step back. Okay, so we're just going to watch this for another 20 seconds and then we'll move on to our next example. So again, we can see a little bit of selling step in. Okay, so a little bit of selling, 92s, and what we said, if we do get fortunate enough, we ideally want to get in where any one of that really aggressive intentional buying stepped in. We saw it both at the 129 but also the 71. It did come down and give you a chance. It gave you 21 lots filled. Straight away back but up. And again, if you're watching the price ladder, you can see the market very aggressive, moved up there all the way to 1295. So a real 30-40 tick move in the market. From what, 92s? I mean, you would have been buying somewhere around 92s up to 95. So a good 30 tick move in the gold, and that signals out then the breakout. Now let's move on to our next example. This is going to be a breakout now in the cable. Again, remember this is obviously mid-range, so you can see this is why it's crucial, because I want to show you guys, I want to dispel that idea that breakouts occur just the extremes. They don't. They can occur from anywhere. And that's why we have the clues like, price velocity shifting. So important. You always do analysis. You always have those blue lines so that when that velocity shifts, you can simply execute. So what you're going to see here now is, the cable is sitting in a relatively sideways range. Note, nothing going on. Okay, really low volume, nice light colors, zero change in the delta. We do, however, have a negative delta on the day, so there's quite a negative delta on the day, but prices are sitting quite close to the high of the day, which is quite fascinating. Now, note what's just happened here. Straight away, the market's come up, and we've seen a relatively aggressive buyer. Okay, now this is a real subtle clue, because something's changed here. If I just saw this now, I'd be really switched on. It doesn't necessarily mean buy or sell, but something's changed, because suddenly we've seen a buyer not just take 200 contracts, but he's also then bought 123. So really, really aggressive intent taken from a buyer. Get what happens to price. It goes in the opposite direction. Okay, and that was our subtle clue. Now, you're going to see how this plays out over the next couple of minutes. Ultimately, we start to see a little bit of an imbalance form in the middle of this rotation. These are obviously 5-minute rotations. And suddenly, we start to see the market move slightly lower and lower and lower. Okay, so we got the signal early on, and all of a sudden the market begins a process of initiative in the opposite direction. Okay, note the imbalances again. So we had imbalances higher up, imbalances lower down, and suddenly the market begins a very rapid process of unwind. Okay, I just want to get back to that break point. So again, just note, guys, it's not always that a breakout is going to be suddenly huge or big. Okay, obviously note we did have a little bit of an outside candle. Okay, note the change in volume, note the shift in delta. That was our real clue on that previous rotation. There was a sudden shift in the game here. It was a game changer clue before we then got the spike. Okay, obviously that was 30 ticks in the cable market. It did extend a little bit lower, another couple of prices all the way down to 20s, and it continued to flush down until it found some responsive buying. Okay, and that was our breakout, guys, but we would have only been able to take advantage. We can see on the candlestick chart, that was our area there. We would have only been able to take advantage of that breakout had we recognized, the fact that, one, we had a key breakout opportunity, but also, two, the subtle clue was there. Alright, guys, that's then the end of our breakout strategy session. Let's go now and complete some of the templates for breakout trading. Context, note, we spoke all about the consolidation, and we want to look inside that consolidation. As you go through this template, make sure you focus in on that consolidation, view what it looks like, look at all the elements within that consolidation, and make sure you're really taking in the objective information inside of that consolidation. Now note, we want to draw out the clues from that consolidation area, because those are the clues that we want to keep drawing out whenever we complete a template on breakouts, to ensure that if we get new clues, we're aware of them. If we get the same old clues, we want to be capitalizing on them. Okay, then in terms of obviously balanced, imbalanced, it's more important to actually identify breakout points, all right? Again, I don't want you to get too fixated on whether it's better or worse, imbalanced or imbalanced, but more so what makes a good breakout zone and what doesn't. So again, when you complete this section, really go and drill down what was the reason for potential breakout, what led you to believe it was a breakout. Write down all these things, really observe that potential breakout point, because again, you want to develop a methodology to determining what is a potential good breakout zone and what isn't. In terms of trade location, well, obviously I did give you a couple of ideas for breakout zones, like double bottoms, double tops, tail highs and lows within a trend, key swing reversals within a trend, inside days, and day two after a trend. As well as, obviously, I mentioned there are numerous others, so just make sure you adopt these as well as any others you might have. Now, in terms of then conditioning, note, we obviously said for breakouts, all participants are in agreement. So just make sure when you are reviewing and adding to the template that all the participants are actually in the same direction. If, for instance, you find that as a market breaks, there's a really high degree of response straight after the break, again, make a note of that, because what you'll find is when you see that, the breakouts don't tend to be as clean. So again, observe every single thing that takes place in terms of conditioning. Liquidity should be low on a break, as all participants are in agreement. So again, highlight it if it isn't. And then obviously volatility. We do expect volatility to be subdued in consolidation before breakout, but once we break, we expect a pickup in the volatility. Okay, let's now go and have a look at the identification of a good breakout strategy. So obviously the interaction is the real key here. If we were to summarize really the entire strategy session, it's all about that moment, that calm before the storm, that real moment before the explosion and the breakout to the upside or to the downside. And where you're going to really get good at this strategy is focusing all your energy on the interaction side. So spend a lot of time thinking about where does the initiative come in, where does the responsive come in, in a good breakout that gave a really big reward and a really big target, what was the early initiative like? Was there any kind of response? What was the conditioning behind that interaction? And that's the real the nuance behind not just this strategy but all the strategies. Obviously, in terms of interaction, we expect aggressive interaction. So again, note, is it aggressive? Is it not? Again, in terms of timing clues, these are the clues that you definitely want to look out for that we went over. One will be absorption, delta coloring, relative changes in volume and price, volatility shifts, velocity expansion, as well as imbalances in the market. Obviously, as you complete more and more of these templates, guess what? You're going to find more clues. Equally, you might call a clue something different. Okay, it's all up to you. The point is, I'm trying to get you guys to get into a very strong habit and a process of, ultimately developing this breakout strategy for yourself. In terms of the metrics, then we want to focus on volume. It should be high on the break as all participants partake. So just watch that volume again. Low volume breaks do tend to fail. In terms of time is a key metric as there are positions locked in once everyone is in the same directional position. So obviously the longer we take to move in that direction, the more likely a potential for a failed break of support and resistance is. Then in terms of delta, look for those dark shades, look for the light shades, look for the imbalances, point them out. Where are they occurring? Why are they occurring? What does it mean? In terms of cumulative delta, obviously it should move in the direction of the breakout and it should accumulate in that direction as well. If it doesn't, note the divergence, okay? Sometimes we do see not just delta divergences which create an exhaustion high or low, but also sometimes a potential initiative or a key auction reversal. And then obviously relative changes, note the relative changes you're observing, note what they could mean and what they could mean in terms of time, price, velocity, delta, volume and speed. Okay, let's have a look now then at the execution of the breakout strategy. So obviously, again, money management, crucially important. We're going to be quite aggressive on this breakout, as well as passive. Aggressive for good reason. We've got potential for great reward. So it makes sense to potentially, if a clue is there or if the signal gets given to us, we do have a little bit of a preemptive strike, simply because the reward is there and it's justified. But also, once we do get that break, we take a little bit more of an aggressive approach on that breakout. So we use both a passive and aggressive approach to execution. In terms of risk, we obviously place the stop below that signal or back inside the breakout zone. In terms of target, well, until the market begins the process of providing liquidity. That's the real key to breakouts. The market is going on a price discovery mode, so it will stop once it runs into liquidity being provided. Do note, obviously, breakouts do tend to extend, so don't be afraid. Like we mentioned in terms of the variations, you've got variation number one, which is the breakout. Take your profits when the market signals it and buy that first pullback, as the probability for extension on breakouts is always very high. Risk reward, highest of all the strategies we're going to go through, and obviously we have a very, very small risk, and we've got really good methodology in this trade strategy, but do recognize the fact that everyone can see a breakout trade, just not everyone knows the subtle clues of when that initiative is stepping in and when those participants are stepping in, and ultimately when you should execute that breakout. Okay, in terms of application, well, obviously, like I said, you can be exact on the breakout, so you're looking for that exact break of a price. That's just before the break. But equally, we can be a little more preemptive if we get one of the signals as mentioned. Leveraging, this is a strategy you can get highly leveraged on, simply because you've got really good reward, very tight stop, and ultimately the potential for a very good gain. All right, in terms of the tip, the entire universe can see the breakout. Okay, note that everyone can see a breakout opportunity. However, successful participants employ a consistent approach to breakouts. Learn it and don't forget it. All right, guys, let's now move on to the next of our additional readings. So this is the second recommended book from Ryan Holiday. Obviously, the first was The Obstacle is the Way. The second is Ego is the Enemy. Great book, fantastic book. It really provokes your thought quite a lot. Note a summary of it. It's a research understanding of how and why of the ego. So it gets you a really good understanding of why people develop an ego. What makes even people without an ego suddenly develop one. And ultimately, why is the ego such a bad thing? Now, in terms of action, very thought-provoking. And it's definitely going to give you a mindset shift. It's definitely going to make you want to adjust how you think about the ego and what it ultimately means. Now, in terms of the key highlights, consistent questioning your own understanding of the self and the ego. I think this is the key takeaway. You're going to constantly be saying to yourself, well, do I have an ego? Is it creating bias in my understanding? Is it creating block, a lack of growth mindset, all these sorts of things? Always stay a student. This is one of the key highlights. Understand we can always grow, learn, and strive for a better version of ourselves. This is one of the key highlights. With an ego, we can't grow as effectively, and this is something the book does spend a lot of time going over. Obviously, then, ego is a natural occurrence, but with practical solutions, you can tame it and control it to make better decisions. So again, it's not about eradicating the ego. We've all got it. We have to live with it. But it's about understanding it and what role it ultimately plays within us, and how we can utilize the ego ultimately to our advantage rather than to our disadvantage. And then lastly, obviously, to measure the performance, not on outcome, but with a scorecard. Now, this is quite cool. I graded the last section to the book. So yeah, highly recommend this book. Again, it is there for you to provoke your thought ultimately and give you better understanding of how your ego might ultimately be standing in the way. All right, let's go wrap up then Unit 13 in the drill section. This then brings us now to our drill section. This is the final slide of Unit 13. You know the drill. Go and watch the drill, complete the template, be accountable to that template. Watch the guided tuition drill, make some notes, compare some notes, make some adjustments. Watch over some of the videos we've dealt with during the unit and during the practical session. And then when you're confident, move on to Unit 14. Now before we move on, a lovely little quote from Benjamin Franklin. We are all born ignorant, but one must work hard to remain stupid. Okay, it's a fantastic quote, and why I like it is that it really pushes home this idea that unless we have a growth mindset, unless we're willing to continuously be learning, growing through failures, through trying things, unless we're willing to do this, we're going to forever remain ignorant. So in order to be that little bit less ignorant, you're going to have to be willing to grow. Thank you, and I'll see you guys again in Unit 14.